If you're looking for MACD settings for profitable day trading, then stick around because I think you will find this video useful. First, I want to go over some basics of the MACD which will help you craft your own strategies. After that, I'll share my backtest findings done for trading Forex and indices with the MACD. The MACD stands for Moving Average Convergence Divergence. It was created in the late 1970s to measure the momentum, direction, and strength of a trend in a security's price. There are three components of the MACD indicator. First, there is the MACD line. This is calculated by subtracting a longer-term moving average from a shorter-term moving average. This is the blue line in the chart. Next, we have the signal line. This is a moving average of the MACD line. In this chart, it is the orange line and you can see that it is smoother than the MACD line. Finally, we have the histogram. The histogram is simply the difference between the MACD line and the signal line. When the histogram is above the zero line, the momentum is considered to be bullish, and when it is below, the momentum is bearish. With all this in mind, when the MACD line crosses above the signal line, it is considered a bullish signal, and when it crosses below, it is a bearish signal. Most MACD indicators have three settings that you can change: a fast moving average period, a slow moving average period, and then a signal length, which is the moving average period of the MACD line. So, how do the settings affect the indicator? Changing the MACD settings to a faster setup like 5, 8, 7 makes the indicator more sensitive to recent price action. The MACD line will react much faster to price changes because the gap between the 5-period and 8-period moving averages is smaller than the standard 12 and 26. This allows you to catch momentum shifts and potential reversals sooner. There will be more crossovers, but there's also a risk of more false signals. Here's a summary comparing the different MACD settings. For shorter time frames up to 1 hour, if you are doing day trading or swing trading, a 5, 8, 7 setting on the MACD indicator is better. On the other hand, if you're doing more long-term position trading and using daily charts and want to smooth out the noise, then the standard 12, 26, 9 settings would work better. Let's now switch to TradingView and look at the backtest results for both Forex and indices. Add the following MACD indicator to your chart. MACD Bull Crossover and RSI Oversold 5 Candles, a Go-Long Strategy by Trevor Namer. So, the default settings are negative, but not to worry, we're going to make it positive and I'll show you how. Before we go further, for Forex, the settings that I've backtested extensively work for the 1-hour time frame. The typical average daily range for Forex, stocks, crypto are different. So the first thing we need to change is the stop loss and take profit. For Forex, use a stop loss of 0.2% and take profit of 1.5%. This indicator also has a filter for RSI. It buys only when there was an RSI oversold candle in the previous 5 candles when there is a MACD buy signal. Similarly, it sells only when there is an overbought RSI signal in the previous 5 candles when there is a MACD sell signal. You can keep the 3076 default settings, but a general RSI setting that I have backtested to be profitable for most Forex pairs is 2087. Finally, the MACD settings we will use is a fast moving average length of 5, a slow moving average length of 8 and signal length of 7. And then we can add some moving averages to the chart, but these don't do anything other than visualization as far as I can tell. Okay, the dollar Swissy is positive thanks to the profit factor. There may be more profitable settings for a pair, but these are general settings. Let's switch to the pound against the Swissy. Again, it is profitable. Switching over to the Aussie. Again, it is profitable with a decent profit factor that overcomes the win rate. Switching to the Kiwi against the Swissy. Also profitable. Profitable again for a more exotic pair like the USD against the Singapore dollar. Likewise, for the Canadian dollar pair. So that's pretty much about it for Forex. Let's switch over to indices. And straight away the PNL is negative. Now, why this happens is because the take profit and stop loss are not correct. The daily movements for indices are very different from Forex. Also, like I mentioned in my video on the super trend indicator, with indices, we want to go only long as much as possible. So the first thing we do is only enable the long strategy and uncheck the short strategy. For stop loss, set it to 2% and set the take profit to 15%. For RSI, you can change it to 3076 or keep it at 2087, it is not a big difference. Some RSI settings might be more profitable than this, but I'm always wary of overfitting. We switch to the Nasdaq now. And as you can see, it is profitable again. Switching to the Sensex, we see that these indicator settings are profitable for trading it as well, with a huge profit factor. Let's review the profitable settings for trading with the MACD indicator. The indicator is the MACD bull crossover and RSI oversold 5 candles, and the time frame is 1 hour. The settings for profitably day trading with MACD are shown above. Remember, for indices go long only. Let me know what you think of the indicator. I'd love to hear from you. Also, please like and subscribe if you'd want to see more backtested settings for indicators and strategies.